Here's how you can take a personal loan without destroying your financial future. But first, let's imagine this. You take a personal loan to buy the latest iPhone. 3 years later, you're still paying the same EMI, not for the new phone, but for the one that's already outdated and replaced. Sounds wild? Here's a number that will blow your mind. Indians borrowed 10.6 lakh crores in personal loan in 2024-25 alone. That's a 25% jump in just 1 year. And the mindset has shifted from borrow only in emergencies to borrow now, worry later. In the next 10 minutes, I will expose the secret playbook banks don't want you to know, including the hidden loophole that can slash the interest rates by 40% and why that pre-approved message is actually a trap. By the way, I'm Nikhil, a chartered accountant by profession. I spent nearly 2 decades working with EY, PwC and one of India's top wealth management firms before launching my own startup. And this is Finicky, where we simplify money, no jargon, just truth. Stay with me because what I'll reveal later about illegal loan apps will literally save you from financial suicide. But first, let me paint you a picture that will make your blood run cold. Meet Priya, a 26-year-old software engineer from Pune. Smart girl, good job, decent salary of 8 lakhs. She took her first personal loan in 2024, 4 lakhs for a Europe trip. The EMI is manageable, 14,000 a month. Again, borrowing for vacation is questionable, but let's hold that thought for now. 6 months later, she needed a new MacBook Pro for work, another 2 lakhs loan, EMI 7,000 a month. Then, her best friend's destination wedding in Goa came up. She couldn't show up empty-handed, right? Another 1.5 lakhs for gifts, clothes and stay. Today, Priya pays 28,000 per month in EMIs alone. That's 56% of her take-home salary of 50,000. She is actually eating Maggie for dinner most days, not by choice, but because that's all she can afford after her EMIs. The scary part, Priya's story isn't unique. It's becoming the norm. The Indian personal loan market has exploded from 135 billion to a projected 556 billion by 2023. But here's the kicker, 66% of these loans are going to people under 35 and defaults among under 25s are skyrocketing. We have created a generation that's financing their lifestyle on borrowed time. Here's how bad it's actually gotten. Fintech NBFCs alone dispersed 10.9 crore loans worth 1 lakh crores last year. They are like drug dealers, but instead of cocaine, they're actually pushing credit. And just like drugs, these loans are designed to be addictive. Quick approval, minimal documentation, money in your account within hours, maybe within minutes. Think about it. Your great-grandfather saved for months to buy a bicycle. Your grandfather saved for years to buy a scooter. Your father saved for decades to buy a house. But you can get a 5 lakh loan in just 5 minutes to buy a phone that will be outdated in 2 years. The sad part, the smartphones have turned credit into a game. Swipe up, apply. Swipe right, approve. And you're actually swiping away your life without even realizing it. By the way, if you're finding this useful, just hit the like button and subscribe. It's a small thing, but it really helps me know that you're enjoying this kind of content and keeps me motivated to make more for you. Now here's where it actually gets both interesting and terrifying. Metro cities might be borrowing the most, but tier 3 towns and rural areas are defaulting the most. March 25 data shows default hit 3.6% overall, the highest in 6 quarters. Let's break it down by location. Metros, 2.9% default rate. Tier 3 cities, 4.2%. Rural areas, 4.1%. You know what this actually tells me? Credit has reached every corner of India, but financial literacy hasn't. We have actually given loaded gun to someone who has never been taught how to use it safely. Now, before you think I'm completely against loan, let me be clear. Personal loans aren't evil. They are tools, and like any tool, they can build your life or destroy it. Here's when a personal loan is actually your friend. The debt consolidation miracle. Imagine you have 2 lakhs stuck on credit card loans at 36% annual interest. You are actually paying 6,000 just in interest every month. Move that to a personal loan at 12% and suddenly you're paying only 2,000 in interest, and that's a 48,000 saved every year. The emergency shield. Remember the oxygen analogy? When life hits you with a medical emergency and you don't have insurance, a personal loan can literally be the difference between life and death. The credit building ladder. For young professionals, taking a small 50,000 loan and repaying it perfectly is like getting a financial recommendation letter. It tells future lenders this person keeps their promise. But here's where the trap snaps shut. Let me tell you about Ankit from Delhi, 28-year-old marketing executive earning 12 lakhs annually. He was scrolling through Instagram and suddenly saw his college friend posting from Dubai. FOMO hit him very hard. If he can afford it, so can I, thought Ankit. Suddenly took a 6 lakh personal loan for a 12-day Dubai trip along with his girlfriend. EMI 18,500 for 3 years. The trip was amazing, 12 days of luxury hotels, fine dining, shopping, but here's the math that will make you sick. By the time Ankit finishes paying, he would have spent 6.66 lakhs on that trip. That's 66 lakh extra as interest for that 12 days of fun. Want to know the worst part? Dubai trip photos got him 847 likes on Instagram and lasted 3 weeks in people's memory. The EMI stress will last for 3 years. And Ankit isn't alone. Small ticket loans under 25,000 saw defaults jump by 44% between December 2023 and June 2024. These aren't survival loans, these are impulse purchases funded by borrowed money. Here's something banks will never tell you. They are not in the lending business, they are actually in the psychology business. If you don't believe me, ask your marketing friend. Every loan advertisement that you see is carefully crafted psychological manipulation. Instant approval triggers your impatience. Low EMI makes you focus on monthly payments and not the overall cost. Pre-approved makes you feel special and chosen. No documentation removes the time barrier that might make you reconsider. It's like a casino. No clocks, bright lights, easy money, designed to make you lose track of reality. Banks have turned loan applications into dating apps. Swipe, match, get money. But unlike dating apps, this relationship will actually cost you for years. Want to know how banks actually decide if you're really worthy? It's not magic, it's actually a cold, calculated algorithm. Credit score tiers. 750 plus score gives you VIP treatment, 9.9% to 15% interest rates. 650 to 750 gives you standard rates, 15 to 18%. Below 650 credit score gives you subprime help, about 18 to 24% interest rate. But here's the insider secret most people don't know. Your credit score isn't just about paying your bills on time, it's about credit utilization, credit mix, length of credit history, and recent inquiries. The debt to income trap. If more than 40% of your salary already goes to EMIs, you're automatically flagged as high risk client. But here's the loophole. Banks only see what you declare. If you have informal EMIs to your friends or family, they might miss it initially, but reality will actually catch up. Job stability math. Less than 2 years in your current job, red flag. Frequent job changes, bigger red flag. Self-employed, biggest red flag. Even if you earn more than salaried employees. Think the interest cost is the only cost for your loan? Think again. Banks are like magicians. They show you one hand while the other is picking your pocket. Processing fees up to 5% of the loan amount. On an 8 lakh loan, that's 40% gone before you even see the money. Prepayment penalties. Want to pay off early? Banks will punish you for it. The good news though, RBI has actually banned prepayment charges on floating rate loans from January 1st, 2025. Insurance premium, often mandatory but rarely beneficial. They'll sell you those loan protection insurance that cost you more than term insurance but covers very, very less. Here's a real example. Let's take a 5 lakh loan at 16% for 3 years in 2025. Advertisement EMI 17,500. Processing fee 15,000, that is about 3%. Insurance 25,000, about 5% annually. Total real cost 6,72,000. Total advertised cost 6,32,000. That's a 40,000 in hidden cost, enough to buy the latest gadget. Now let's talk about the wolf in designer clothing. Buy now, pay later. Companies like Slice, LazyPay, and Uni have mastered the art of not calling debt. They call it smart spending, flexible payments, or even financial freedom. But your credit report calls it exactly what it is. Debt. India's BNPL market exploded to 44.9 billion in 2025, with transactions growing 300% year on year. That's explosive growth is spending money people don't have on things they don't need. Here's how the psychology trick actually works. Instead of saying take a loan for 1 lakh for that iPhone 16 Pro, they actually say pay just 15,000 now, spread the rest over 12 months. Same debt, different packaging. It's like calling cigarette stress relief sticks. The name changes, but cancer doesn't. And now for the financial horror story that will actually make your blood freeze. illegal loan apps, the financial equivalent of loan sharks, but digitized and more dangerous. Meet Suresh from Hyderabad. Desperate for 25,000 to pay his daughter's school fee and medical bills, he downloaded an app promising instant money. Got the loan in 2 hours. The nightmare actually began after 2 weeks. When he missed just one payment, they didn't just call him, they actually called his wife, his boss, his neighbors. They even sent morph photos of his family to his WhatsApp contact. They threatened to visit his daughter's school. The 25,000 loan had an effective interest rate of 365% annually. Yes, you read that right. In 6 months, Suresh owed 1.12 lakhs. The good news, government cracked down hard in 2024-25. Unregulated lenders now face up to 7 years in prison and fines up to 1 crore. Over 500 illegal apps were banned, but the prevention is better than justice. Here's the macro picture that should terrify every Indian. India's per capita debt jumped from 3.9 lakhs in 2023 to 4.8 lakhs in 2025. That's almost 1 lakh more debt per person in just 2 years. And what about disposable income share spent on debt? 25.7%. 1/4 of what Indians earn is already committed to EMIs before they even receive their salary. We are not just borrowing money anymore, we are actually borrowing our future. Household debt to GDP ratio has hit 41.9% with consumption loans forming 55% of that debt. We have become a nation that's financing lifestyle on borrowed time. The future of loan is both exciting and very terrifying. AI-driven underwriting is analyzing everything. Your UPI transaction patterns, your social media activities, even your smartphone usage data. Miss too many calls, it's a red flag. Order food delivery too often, potential financial indiscipline. The account aggregator framework gives lenders real-time access to your bank account statements, mutual fund investments, and insurance policies. Privacy is actually becoming a luxury only the debt-free can afford. By 2031, 40% of India will be middle class, driving credit demand through the roof. But will financial literacy grow at the same pace? Current trend says absolutely not. If you absolutely must take a personal loan, here are your survival guide. The 40-20-10 rule. Never let your EMIs exceed 40% of your income. Never borrow more than 20 times your monthly surplus. Never take a loan for anything that loses 10% value annually. The comparison metrics. Check at least 5 lenders. You can use the online aggregator sites to get this information. Compare APR, not just interest rate. Factor in all hidden costs. Read the fine print like your financial life really depends on it, because it actually does. The emergency fund test. Can you pay 6 months of EMIs even if you lose your job? If no, you are not ready for the debt. The Instagram test. If you're borrowing to impress people online, you're actually borrowing from your future self to pay for your present ego. Let me leave you with a story that changed my perspective on debt forever. Meet Rajesh, the king of EMIs. Car loan, home loan, personal loan, credit cards, he was paying 45,000 in EMIs every month on a 80,000 salary. Then COVID hit. It hit really hard. He lost his job. Suddenly, all those manageable EMIs became financial quicksand. The stress didn't just affect his bank balance, it destroyed his marriage, his health, and his confidence. Today, Rajesh lives debt-free not because he's rich, but because he learned the difference between what he needed and what he wanted. Personal loans aren't free money. They are expensive money disguised as easy money. The next time you see that tempting get instant loan notification, ask yourself, are you solving a problem or are you creating one? Because in the game of personal finance, the house always wins unless you refuse to play by the rules. That's it from me. I'm Nikhil Verghese. Share this video and subscribe to learn how to make your finances less tricky with Finicky. And remember, the best loan is the one you never need to take.